Good afternoon, traders. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and for today's edition of Trade Talks, we're going to look at anthropology and the art of real estate. David, I want to thank you for joining me at the Nasdaq Market site. This is a new topic for us, and I want to hear how anthropology actually relates to real estate.
Well, thank you, Jill. Nice to be here.
Thank you.
Yeah, anthropology relates to real estate in ways that we evaluate an investment opportunity, and essentially what we do is we go to a market that we're interested in acquiring an asset, and we look around the asset and we try to understand we treat it like a living, breathing being.
Right.
And we get to this point where we want to understand where it's been and where we can take it when we add our value to it.
Right.
So we're looking at things about it. We're exploring, like an anthropologist would explore a culture in some faraway island. We go to this asset. We want to see, why is it acting the way it acts, and what goes into it to what do we need to do with it to drive it to be a good investment for our investors.
It's really interesting because in today's day and age, it feels like a lot of investments are data crunched, and there's not as much feet to the street anymore. So what I want to understand is, how do you pick out a region for multifamily asset investment, and what are some of the things that you look for? What's positive, what's negative, and what can be fixed?
Sure. So we're at the core of what we do. We're value investors. So we tend to gravitate towards assets that are mismanaged, that aren't performing as well as we think they should be performing. And so this drives us to lower middle market demographics, if you will, and to places in secondary and sometimes tertiary markets that are not institutional quality. So we don't find institutions doing a lot of business there, so it's more fragmented market where we can go to an asset that doesn't have a great owner, doesn't manage it well, isn't being marketed well. So there's a lot of opportunity to go in there, apply really good, aggressive, consistent management, increase make the curb appeal more appealing, refresh the apartments. And so we look for opportunities that we know we can go in there and do these value add.
So you'll actually work with the current management and leasing teams to bring them up to speed, or is that part of it?
Yeah, well, what we do is when we acquire a multifamily community, we generally bring in our own management team, and we have a business plan for them that we set up when we were evaluating the asset. And that's part of where the anthropology comes in, because when we go to an asset, we got to understand, how can we do things better? So we got to really understand the asset. You walk around the buildings, you look at the model apartment, you evaluate the leasing agents. You have to really get your hands dirty, if you will, in understanding why is this asset performing the way it is before we buy it, and to be able to formulate a business plan in which we know we can do better here, we can do better there, we can increase our revenue this way, and decrease our expenses this way. It's all about increasing the cash flow and increasing the value of the investment.
Right.
And so once we're done with the acquisition, we buy it, then we're very aggressive in managing the business plan and making sure our team there has, they understand the business plan, they understand where we want to take this asset. And
how long do you typically hold an investment? Does it vary from investment to investment?
Yeah, it's a great question. So it depends on the investment. We have an asset, for instance, in South Atlanta we bought a year and a half ago. It was a deep value add where it was being completely mismanaged, high vacancy rate, but I love the asset. I love the physical component of it. And I know we can drive it better. So we, in 18 months, have increased the value we bought it for $7 million. We just got an offer to sell it at $12.8 million the other day in a year and a half. So that's a big return for a year and a half. Big IRR for our investors. It took a lot of heavy lifting. We got our hands dirty. I was very aggressive about going down there myself and really overseeing the operation. Right. And we've been able to, just increase the value significantly in a short amount of time.
So you're invested in the southeast of the U.S. What's your opinion on the multifamily market overall? Are there pockets of the country that are outperforming others?
Yeah, well, it's interesting. It depends on what you mean by outperformance. For instance,
or what's the most attractive area?
Yeah, well, in terms of what we do, like we're trying to find assets that are a little overlooked. They're hard to understand. They're in the parts of the metro where it might be not quite as understood. So we're seeing opportunities in South Atlanta. We're seeing pockets in Jacksonville. I was just there the other day. Tampa, I was there the other day in Clearwater area, looking at an asset that is, the whole market in Tampa is doing very well, except for sort of the A quality. They're overbuilding in the high-end market. And so we're seeing some vacancy softness there. But in the middle market B and C class apartments, the occupancies are very strong, the rent growth is there, so it's really looking in secondary markets, sometimes in the Midwest, sometimes in Texas. So we're getting deal flow all the time, and we see some opportunities still in various markets.
That's very interesting. Thank you very much for joining me at the Market Site, and thank you as always, traders, for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.